So today our topic is regarding the insurance analytics. We will have the case study of the ICICI Bank. That is, once again, we are going very slow because we are nearing the end of the semester. And our programming, I think Sri Priya Madam will teach you how to use the R programming in finance. Okay, that is 5th unit, only one part is missing. Remaining thing, I hope we are able to complete on time. So be ready for that one. For the internal exam, for your internal exam, up to insurance analytics, what you have studied from practical, then first, second, third, and the insurance analytics. Still then, some of you have not gone through the LMS. I think only if you open the LMS, you are able to see one by one. Only if you press completed, then only you are able to move to the next. I won't share the PPT or I won't share the materials. All are available in LMS. So go through that one. Don't copy from the LMS. Okay. Now everyone, Manuel also joined. Manuel, are you in your native or returned back?
No, sir, native.
Native. Oh, when you are coming back to Bangalore?
Sunday, sir.
Sunday only. Oh, your friends are joining only on Sunday.
Yes, sir.
Okay. So Monday morning by train you will reach here. Okay, Manuel. Million, you are in where you are?
Sir, college.
Okay. The echo is coming. Okay, students, we'll move slowly. Don't worry. That is why I will ask some questions. Be ready to answer. And we are discussing theory. All this theory you will have for the internal examination. Okay. Very interesting news about the case study of the insurance. Here is the news. I hope I already shared with you. There is tech enabling innovation across innovation sector is coming. Just a day before. Yesterday only the news came and it appeared in the MSN Money. Very interesting news which has been shared from the business today. One of the famous person from the insurance tech, Tina Jain, Kaushal. She interviewed with the Parag Sethi, the co-founder of India Insurance Tech. And based upon the interview with the Parag Sethi, the abstract has been given here. A nice interview. You may also work in such type of insurance tech organization. That is why you are studying that part. According to him, you can see that one, the insurance industry is once again signing back because of this COVID. Thanks to COVID, after the COVID and during the COVID, most of them are moving towards the insurance. And not only due to COVID, but number of reasons. The risk, what we have discussed previous class, due to the risk mitigation in insurance, they decided to move towards the insurance. So more funding is available in insurance. Of course, insurance companies also face the problem of huge clients, especially in American and European countries, but not in India. See that one, the insurance industry is moving towards the InsurTech. The technology has been linked with that one, especially for calculating the risk. Because risk calculation in insurance industry is very, very tough job. We may not know when we will die. Same thing. Predicting the age of a particular person is extremely difficult. But they have to depend upon some factors. based upon some of the medical inputs, as well as the average age, they have to predict the risk. Risk prediction is very tough in insurance because they may not know our behavior. Even then, they are introducing the new methods in insurance. Okay? So especially insurance checks, they are providing the policyholders for calculating the premium, that we have seen that one, how to calculate the premium. And most of them are providing the pricing, policy administration, claim, etc. Few companies, EBO, Metamorphosis, Navist Solution, XGIS. These are all the companies available in Bangalore also. You might have seen the Metamorphosis, your seniors are working. And other digital companies are there. That is digital health players from Onshore Trophy, Discovery. These companies are also in Bangalore. Now they are joining hands with the digital health players and they are creating new product. That's what the news is saying that. And most of the insurance companies, they are joining hands with the Excel, Exceedance, C2L, BIS, all those things. These are all the consulting companies for the insurance sector. And they are joining with these people to provide the better services, especially estimating the risk, estimating the premium amount, everything. Of course, these industries are doing only in the back office. You may not know, but more income is from these type of organizations. That is very interesting to know that one. Let us move on to the conceptual nature. In conceptual nature, we are going to discuss basic things of insurance to enable to study the analytics. Okay. Let us see the case study of the ICICI Insurance. We have discussed on the other day some basic principles in insurance. That is insurable interest, aber need defeat, that is utmost good faith. These are all the insurance principles. How far we are going to use the insurance principles, you must know. Okay. Let us start with the nice example of the ICICI. This is the one of the ICICI ad. Something you lost forever, that is the marriage. So the insurable interest start from the marriage. As I already told, you may have good friends, but friends are not having insurable interest with others. That's what we discussed. Manuel and Joseph are very good friends. Even they are staying in the same room, same house, and they are sharing rent, everything. But Manuel is not having insurance interest with Joseph. Why? Because the relationship is not considered as the blood relationship. So Manuel can't invest or have insurable interest with Joseph, and he can't say that if anything happens to Joseph, I will recover some amount. You can't say like that. Manuel can't go for insuring the life of Joseph. Joseph can't insure the life of the Manuel. Same thing. But in case of Jason versus Sanoj, it may be, I think they are all relatives, but only if the blood relatives are coming, then Jason is having the insurable interest with Sanoj and Sanoj is having the insurable interest with the Jason. Otherwise, they may not have. Some sort of relationship is essential. That relationship should be mentioned clearly. You can see in the ICICI Insurance, they mentioned that it starts from the insurable interest. It's used to plan with the insurable interest. Even though there are good relationships like friendship, but this friendship won't come under the insurable interest. But some cases, this type of friendship will come under the insurable interest. When, if Manuel gave 10 lakhs loans to Joseph. Let us assume like that. Joseph is asking to do a very nice business. So what Manuel is doing, okay, Joseph, I will give 10 lakhs to you and we can start the business. So now Manuel and Joseph become the partners. Or it may be coming under the debtor or creditor relationship. Now Manuel is having insurable interest with the Joseph. Be clear, there is need for some relationship, but friendship is not coming under the insurable interest. That is why when you are calculating the premium, everything, you won't consider the friendship. But psychologically saying, your friends will know what you are going to do. If I wish to know about the Manuel, I will ask only to Joseph. Joseph, what about Emmanuel, whether he is doing well, whether he is studying? Only Joseph will tell clear picture about Emmanuel. Likewise, usually, I never ask Sanoj whether you are studying. I will ask only Jason. Jason knows that whether Sanoj is studying or not. Even about, if I wish to know about Jason, I will ask Sanoj only. Because they are all friends. But in practical life, it is good. But when it comes to insurance, if there is no insurable interest for the friendship. If there is need for insurable interest, the friendship should have the debtor or creditor relationship, or they may be the partners. Okay. Likewise, if you are having the building assets, you are having the insurable interest with the building. If you purchase a nice house, then you can insure the building, provided you are the owners. Even if you are rented in a house with the agreement, it is also having the insurable interest, but not in India. See that one, your home, your asset, your home is your asset. But your Anthony Babu is having a nice building, but the building is in the name of his father. Whether Anthony Babu is having insurable interest with that building, Anthony Babu father is having a nice building and they are all living together. But Anthony Babu wishes to insure the building. Whether Anthony Babu is having insurable interest with the building, that is his own home, but as per the deed, it is owned by his father. Yes, come on. What, you are sleeping nicely? I'm going to post everything in YouTube. What happened? Who is going to answer? Rosemary?
Yes, sir.
Yes, what is your answer? Do you know the question clearly?
So no, sir. Can you
Why
repeat?
not? That means whether you had your lunch now?
Yes, sir.
Okay. In this example, Anthony Babu is living in his father's house. It is a very big building. And Anthony Babu wishes to insure that building owned by his father. Whether Anthony Babu can insure that building.
So the house is insured by his father. So
The house is owned by his father. But Anthony Babu wishes to insure that building.
So only the owner of the property can take the claim of or insure the building, the property.
Are you 101% sure?
Yes, sir, because the ownership has to be with the person.
Okay, that is your answer. Anyone who is against the views of her? What happened? Alexander,
Yes, sir.
what is your views?
Sir, sir, Anthony can insure the building.
Why? But the property is not in his name.
Sir, that doesn't matter, sir.
Why? You are coming near to the answer. Tell me the answer.
Sir, the ownership doesn't matter for taking an insurance.
Oh, then what matters? Anybody can insure any building. See that one. Yes, you are struck down. Any other students? Sanket will answer. Sanket? Nobody is there. Okay, then Kiran will answer. Kiran is there?
Of the blood relation, Anthony can insure the house.
Yes, good, you are correct. You are absolutely correct because Anthony is having the blood relationship. Remember that? Anthony is having the insurable interest to the house because the house is owned by his father. Father and Anthony is having the insurable interest. That is the cascading effect in insurable interest. Why you are studying? When you are studying the analytics, you must create a relational database for that one. Who is having the insurable interest with others? Anthony Babu is having the insurable interest because the property belongs to his father, who is having the blood relationship. Likewise, after marriage, the husband and wife will have the relationship, so they can have the insurable interest. Okay. That is why in case of insurance, the insurance product has been designed like that, based upon the insurable interest and which is going to last forever. That is very important thing. In ICICI, they mentioned that almost all the policies they are creating based upon the insurable interest. Here, they in the case example, they are saying that ICICI Pru whole life plan. That is ICICI Prudential Insurance Plan. Under that, it is a whole life plan. So what is the, whether insurance they have to pay premium forever? What is the meaning of forever? Whether they have to pay the premium, that is the first question. So in insurance, the cost of the insurance refers to the premium. Be clear. Your premium you have to pay every year, or at least every month, or some cases quarterly, halfly. It depends upon the customer. But in insurance, you must know that very important thing, the cost of the insurance means the premium of the insurance. You have to pay till certain date, which is mentioned under the life insurance policy. In case of goods and any other thing, you have to pay the premium, then only you can go for the insurance. That is why it is mentioned that the forever, you have to pay the insurance forever, especially in case of these goods and services. However, in case of life insurance, they are quoted. You have to pay the premium. If anything happens in between that period, you can recover the claim from the insurance company. Why it is important for analytics? Because we have to estimate the life of a particular person. What is the life of Anthony Babu? What is the life of Millian? How many years he will live? Even though the insurance company won't disclose all those things, but for their benefit, they will calculate. Manuel's age, they may calculate. Manuel may live for 89 years, 8 months. They may calculate. Because he is not having any fever or his body is very good. At the same time, he can beat minimum 20 persons. He is having such type of stamina. So they may estimate that his life expectancy may be 90 years. It is quite common. That is the prediction here you must know. That is why you must know how many years you can pay the premium. Sanket said if he used to say take the insurance policy, Sanket will go through the premium calculator. That is called actuarial valuation. They will estimate that Sanket will live for 93 years based upon the sum of the assumptions. So be clear, the forever means that insurance premium can be calculated, but not fully, only to the certain period. Here is an example of the ICC prudential life insurance. You have to only for limited term and get the benefits for the lifetime. Up to how many years you have to pay? That is a very interesting calculation. You must know that one. In case of insurance company, your boss is saying, okay, you can add another 10 customers. The customers may ask, Alexander, how many years I have to pay? It is quite common. If Anthony Babu is the customer, Anthony Babu will ask Alexander that, Mr. Alexander, I wish to take the life insurance policy. How many years I have to pay premium? You have to answer. This answer is not same for all the people, unlike in banking. Banking it is same, but insurance it won't be same. It will differ according to the different people. That is the premium calculation. How many years you can pay the premium? It depends upon the age. In case of India, if you are going for a life insurance by the age of 33 or 35, you can see that one, you are in a good position. So the premium payment time will be up to the age of 48. After that, you need not pay premium. So you have to calculate like that. You must know after how many years you have to pay premium. Okay? And how many years the insurance policy will be covered. In case of two-wheeler, I think you know, only 1 year. You can take the insurance policy for your two-wheeler for 1 year. After that, you have to renew that one. Even you have to show your vehicle. But some of the cases, they are getting bribe and ask for your vehicle. That is the term plan. Okay? Here, you must calculate the premium payable term. PPT here means premium payable term, not PowerPoint presentation. Okay? Double the sum coverage during the premium payment term. How many years you are going to pay the premium? For that only, you will prepare the plan. Okay? And once you know that one, you will get the bonus. Another important thing, in case of insurance, the bonus of the insurance company will be given to the policyholder. That is the very interesting thing. In case of banking industry, it is not applicable. Banks can earn profit, but that profit never belongs to customers. But insurance, it is not like that, because insurance is moving in the principle that utmost good faith, which means in Greek, abarmi fidi, utmost good faith. That is why in case of insurance, if there is any profit, it will also goes to the policy holder. In other words, policy holder is equivalent to the owners of the insurance company. But it is not like this in case of banking company. But nowadays, number of things are changing. Okay. What are the benefits from this policy they mentioned? That whole cover, insurance protection till the age of 100, but we may not know how many years we will survive. But in that, ICICI calculated that maximum life expectancy in case of India is 100, maximum. For, I think now some of the female members, they are living even more than 100 years. You came know that recently one of the person died in Canada. She is an age of 121. See that one. So coverage, but we need not pay the premium till the age of 100. Or even you need not pay up to the age of 80s or 70s. You can stop pay premium at the age of 45 itself. That is possible. And you can see that one double this sum assured. That is premium payment term. PPT means savings is also there. The bonus will be saved. It won't be given in the form of cash. Then the coverage through different riders. We'll see what is the meaning of riders. Okay. These are all the things you must know. Then, in case of insurance, at present, what the amount given to the insurance in the form of premium is exempted for the tax. That you must know. So you need not give more importance for that one. Whatever the medical claim premium you are paying, it can be exempted by the tax. Then see that one, how the insurance product has been working. In other words, if you are studying insurance analytics, you must know how to create the products for insurance. You have to choose you can choose the following: sum assured, how much amount you are, premium payment term, how many months or how many years you can pay the premium, whether you can pay the premium quarterly, half-yearly, or annually. That is called PPT, premium payment term. And how you are going to pay. Now digital methods are available. Even I think in this today's budget speech, it is mentioned that we are moving towards the 5G, so we can have the digital currency. See that one. Next, you must know at the end of the premium payment term, how much you will receive. Then how much insurance it is covered under the premium payment term. Then insurance coverage for whole life of your life after the premium payment also. That is very important thing. You can pay the premium up to the age of 45 or 50. Even after that, you may have the coverage. That is also there in insurance. Here is an example of the insurance given from the ICICI. We will see policy term whole life a person has taken. He is paying the premium minimum for 10 years, maximum for 30 years. It depends upon the age. Minimum age entry is 0, but maximum entry is restricted 60. After the age of 60, you can't go for premium. You can't go for buying the LIC policy. And nowadays, the premium is payable in the either yearly, half-yearly, or monthly also. See that one in this policy, they have mentioned what are all the benefits you are getting if you are getting the money from the type of organization. They mentioned that savings benefit is there. That is, you can invest regularly in the secured savings plan. It is like SIP. Okay. That is how the bonus will be calculated. It also has the savings benefit. So when you are designing the insurance product, you must know the savings benefit also. And it includes sum assured, what is the total money of the insurance value, reversionary bonus from the same LIC corporation, then the terminal bonus. Terminal bonus means at the year end, how much they are receiving as the bonus. These are all the things you must know before calculating the insurance value. That is the actual insurance value. There is one more thing is that it is called the revisionary bonus. You can see the revisionary bonus means, I already told bonus, the insurance company may receive, but you can't withdraw the bonus immediately in the form of profit, that is in the cash. That is why the government issued the new guidelines. You can have the revisionary bonus also. That is, after that one, you can get that one. Okay. Here is another example. The whole life benefit, how they are calculated. It is equivalent to the sum assured for life with no additional premiums. Okay. Inheritance is defined. Emergency is also defined. Inheritance means leave legacy of your child or wife. How much you are going to compensate for your kid or kin under the insurable interest. Then emergency fund, you can get the 80% of the amount invested in LIC or any other insurance company for the emergency also. That is but it is in the form of loan. Okay. Here is another example of the insurance. A person is age 35 years, is the government trader, his income is 20 lakhs, having the wife and 8 years old daughter. So that is how the product is designed. You must go through this example. Kiran is having the doctor, so Kiran is mentioned that, sorry, Karan. So Kiran is thinking about that one. He is having the wife, that is why it is mentioned. Richa is the most important person in my life. He can have the insurable interest with his wife. This is her doctor. Richa is her doctor. Her marriage is most important responsibility. So he wishes to plan the marriage cost of his own doctor. That is quite possible. Even your parents are having the dream, how you can have your marriage. And this person is going to get married, his daughter, by the age of 23. And he expected that he should have 20 lakhs expenses for a doctor's marriage. So he wished to have a simple plan of investments. He wished to have a plan for insurance coverage, everything. Okay. So for this type of person only, we need the insurance. You can see that one, the premium is 1 lakh per annum. If he entered into the age of 35, he can get the premium, have to pay premium till the age of 49, that is 14 years. After that, he need not pay. If the current dies, the family will get 21 lakhs plus the bonus. If he is not dying, he will get the 21 lakhs for his marriage of his daughter. See that one, how an insurance product has been designed. And that is the concept of insurance. Okay. What is mean the whole life? You can see that one, he does not need to pay any premium. He may find it difficult life cover. Whole life can cover a security. Whole life can be gifted to richer. He can take an emergency loan also. This is how an insurance product has been designed. Here is another example from Rahul. He is aged 40 years. He is working in an FMCG company and earning around 15 lakhs per annum. He is having two dependents. One is, having three dependents, wife and two children. So each and every customer, it will be different. You must know that is the uniqueness in case of insurance. But in case of banking companies, it is not like that. We only the money will speak there. In case of the second case example of the Rahul, you can see he's having the age of 40 years, income 15 lakh. He's having the investment. Anyway, he may wish to retire at the age of 55. So how much he will get it from the insurance? That is the important thing. You can see that one, same thing here in case of insurance, they given the solution that you can pay the premium up to the age of 55. Even if you die before that one, your family will get 39.5 lakhs plus the bonus amount. That is the interesting thing, how these people are convincing the public to invest in their insurance scheme. Okay. Even the tax-free pension schemes are now available. That is, if you pay 21.7 lakhs, the total payout becomes 66 lakhs. From that money, the interest will be given to him as in the form of pension. That is after retirement. Okay, you can see that one. These are the charts they are prepared by the insurance company. So you are studying analytics to digitalize all these things. Then it will have a rider. Rider means illness rider. If you are facing illness, immediately they will ask for pay premium of just 100 rupees or 200 rupees. And then they will go for getting the critical illness rider. Say for example, recently in case of COVID, if you wish to take a policy for you, they won't give. At the same time, they may ask somebody for the illness rider. Okay? Likewise, accidental disability benefit rider is that on the death due to an accident, some assured will be payable to the particular person. That is the disability benefit rider. Okay? Yes, how they are calculating the premium, it is based upon the rate per 1,000 of the sum assured. Less than 2 lakhs nil, 2 to 3 lakhs 4.3. Why you must know when you are coding or programming, you must know the rebate calculation. Yes. Then there is one concept called surrender value. Surrender value means if you assume that no need for continuing with the insurance, you can surrender your policy and get the surrender amount. That is also possible. That is called the surrender value. Okay. Then the paid up policy. How much amount you already paid to insurance company, either in the form of premium or any other mode that is coming under the surrender value. How they are calculating surrender value paid up is equal to surrender value multiplied by total number of premiums paid divided by total number of premiums payable. That is the paid up value of the surrender value. How much premium they have paid, how many years it has been invested with that one. They can get back their surrender value. Okay. Likewise, policy renewal. How to renew the policy? Then it is like normal documents, but only thing you have to renew till your age of 65. Sometimes you may not pay the money. So it is considered as the lapsed policy. Lapsed policy means those who have not paid the money. Our bank may impose some restrictions. It cannot be done by that person. Okay. The lapse, they need not pay the premium. He simply slept with the insurance premium without paying the premium either in monthly or quarterly or half-yearly or yearly basis. Okay, that is why it is allowed within 2 years of due date. And the policy holder should furnish some of these expense, evidence of health, life, all those things. That is the policy renewal system, but it depends upon the insurance company. Let us come to the core point of view. What type of analytics we are using in the insurance sector? Yes, whether you are nicely sleeping, you know the basics in insurance. What do you mean by surrender value? What do you mean by surrender value? Whether the premium is same for everyone in insurance, like banking company interest. What happened? Whether the premium is same for everyone. Whether his age is 60 or 70 or 40 or 23, like you.
No, sir, it's not same.
Why it's not same? Come on. You are absolutely correct. That's what I told. It depends upon the age factor. In India, but in some of the countries, they are asking medical certificates. Based upon the medical examination, they are fixing the premium. Okay? That is the role of analytics. You have to fix up that one. You can see in case of insurance industries, also here, they are having same type of analytics, predictive analytics and descriptive analytics. In case of predictive analytics, we used to classify, and based upon the classification, we'll fix, we'll estimate. Clustering means the grouping of the variables. Regression, you will estimate how many years it will go. Okay. These are some of the things used for the analytics. Here is an example of the predictive modeling. You can see the classification, then regression, clustering, and association rules. They used to create what type of association is they are having. Yes. Then coming to the predictive modeling, you can see that one. In which area we are using the predictive modeling? Actuarial investigations. That is calculating the premium. Very important thing. We are having actuarial science also. Then to find out the customer experience, fraud detection. What are all the different types of fraud it will come used for that one? Then underwriting, that is risk converting. Finally, the business plans. For this purpose, we are using the analytics. Most probably, the actuarial investigations are coming under the plan of premium payment. How to calculate the premium, all these things comes under the actuarial investigations. Then customer experience. We need not take away our customers or give away our customers to somebody else. So how we can maintain the insurance policy holders? Then claim fraud detection. Most of the claims, they are happening in a fraud mode. Might have seen very old Rajkumar films, even the Amitabh films. Somebody will be killed only for the purpose of insurance. Now, to avoid that one, they used to find out the fraud detection. There are a number of interesting cases relating to the fraud. Say, for example, who are all there? Yes. Vignesh is driving the vehicle. He insured the car. He is driving by midnight 11:30 and he is reaching Tumkur by morning 3 o'clock. Okay. But when he insured his car, when he was traveling, he stopped the car, assumed that some black devil is approaching. And that black devil attacked his Vignesh car. Now what happened? Vignesh is very cautious. He is telling, don't worry. Even the devil is telling to Vignesh that, don't worry, you can claim from insurance. Next day, the Vignesh is saying that he is filing the complaint with the police. And because a police complaint is essential, the devil attacked my car. So I wish to claim the insurance. Okay. Other insurance company will give money for Vignesh to repair his car. Yes, Ignatius, whether you understand my question? Yes, Ignatius, tell me.
Yes, sir.
What is the answer? Whether insurance company will compensate Vignesh for the devil attack of his car?
Sir, could you repeat, sir? It is voice was breaking.
My voice is breaking. We are sleeping or I am sleeping.
No, sir.
Vignesh is traveling from Bangalore to Tumkur. He
Okay,
started by midnight 11:30.
Okay, sir.
Okay. When he was traveling by midnight, he saw a devil approaching towards his car.
Okay.
Okay. He stopped the car.
Okay.
The devil attacked the car instead of Vignesh. Okay?
No, sir.
No, I am not saying no. The devil attacked the car, not Vignesh. So next day, what Vignesh is asking, the insurance company, a devil attacked my car. Whether you will give the money or not. Insurance company, whether they will give.
According to me, no, sir. A few insurance policies do not mention that, no, sir. So I don't think so. They would give the amount.
How they have not mentioned anything. If your car has been struck, met an accident or anything,
Yes, sir. We can claim them.
insurance amount should be paid.
Correct, sir.
Here some devil attack. Why can't Vignesh can claim? Yes, come on, Ignatius.
Yes, sir. We can claim, no, sir.
You can claim.
Yes, sir.
Why, Ignatius, you are changing frequently. But there is no proof that there is a person called devil.
Sir, first party insurance, you can claim, sir. When you do an accident by yourself, you can claim the insurance amount, sir.
but the word devil is not defined anywhere. Same thing happened, and if a person filed in the court of law, insurance company denied. This person mentioned that it is a devil, and the court called both of the insurer and insured. They conducted a long discussion, but they gave the verdict. Before telling the verdict, I am asking your opinion. Why, if you are a judge, how you will decide? What, Sanoj, what you will decide if you are a judge?
Sir, whatever is written.
Huh? What
According
will be
to the law,
if
sir.
you are a judge? Whether you will say that insurance company can compensate Vignesh for devil attack, or you can conclude that insurance company need not give amount to Vignesh for devil attack.
Need not give, sir.
Why is Sanoj?
Sir, because no devil, sir.
That is the point. And our acts are very clear. If your car has been damaged accidentally, the act never mentioned that accident might have happened due to devil or not due to devil. Something happened to the car. You have to compensate. So Sanoj is saying you won't give. Kiran is there. What, Kiran? What will be your answer if you are a judge? What happened? Our Kiran is not there. Then who will answer? Girls will answer. Some girls will ask questions. Blessing, Richurai, Harini. What happened? Monisha. Girls are nicely sleeping. I will post this one in YouTube first. Anjana, Megha, Nandish.
Yes, sir.
Who is there? Megha.
Yes, sir.
Yes, Megha. If you are a judge, what will be your judgment? For Vignesh car, a black devil attacked Vignesh car when he was traveling from Bangalore to Tumkur. Whether you will favor to insurance company or Vignesh. Insurance company is not ready to give money to Vignesh, but Vignesh is saying that I can claim because it is an accident. As a judge, how you will give judgment? What, ma'am?
Sir, such kind of things are not registered in.
How you can say that it is not registered? As per the Insurance Act, it says that.
Sir, even though it's an accident, but still there are some things that particularly mentioned in the things that they will be getting the.
What? Okay, any other answer? Come on. Ivan will answer differently. Ivan?
Yes, sir.
Yes, if you are a judge, what will be your judgment?
Sir, I'll favor the insurance company. There's nothing specified as a devil, an accident, linked something in the policy. So there is no need money.
Very good. So Ivan is 110% correct. Same judgment has been given by the Bangalore High Court. It shows that as per the agreement, any damage happened to the car, insurance company will compensate. In the act, it is not mentioned that it should be done by a visible person or invisible person. Nothing is mentioned. If any damage according to the, he proved that he was traveling. It was in the highways. From Bangalore to Tumkur, he was traveling. Even though there is nobody to prove that that's a concept called black devil. But it's mentioned that whatever the things happening to the car, you have to give the damages. Be clear. That is what the claim fraud detection. That is why now the claims are very, very clear. They are clearly defining, and before going to the policy, they are getting your signature in number of places. And they are estimating when the fraud will happen. Same thing. In different places, the fraud detections are very, very high. And you can see in case of recent COVID cases, they mentioned suddenly that for COVID, there is no claim. So a person died. The government, even though they knows that he died because of COVID, in the death certificate, they mentioned that he died due to SARS virus. And the insured, that is the husband of that person who died, went for insurance company, and he mentioned that you have to compensate because of my death of my wife. She died due to SARS virus. But insurance company told that, no, your wife died due to COVID. You have taken the precautions of COVID, and they shows that they shown the video also. Because this person, when he buried the body of his wife, taken the video. In that video, it is clearly showing that his wife has been died because of COVID, and all the precautionary measures has been taken. The body has been buried 6 feet down, all those things. So insurance company mentioned that your wife died because of COVID, so we won't give the compensation for COVID. So this person went to court of law. That happened in case of Madhya Pradesh, Bhopal. I think some of you are from Bhopal also. And this person went to court of law and demanded that my wife died because of SARS virus. As per the policy, only if there is COVID, they need not get money. That too, in the policy, it is not mentioned as COVID. Later, they added that COVID, we won't give the insurance. But he asked to the insurance company is arguing that he died because of COVID, and they showed the video of the burial also. So if you are a judge, what will be your decision? Come on. Whether you will compensate that person or you won't compensate that person. Hemant, Pavan, what Pavan?
Yes, sir.
If you are a judge, whether you will favor insurance company or the
The patient side.
how
A death party side.
death certificate.
Yes, sir.
Or you will believe only the death certificate. Actually,
No,
what
sir.
happened you won't see.
No.
But insurance company is proving that that body has been buried because of COVID.
Anyway, it happens unexpectedly, right, sir?
Okay, Pawan, good. Any other opposite answers? What Pawan said is correct, because the same thing happened in the fraud detection. The government only issued the death certificate. Government clearly mentioned that the person died because of SARS virus. It has been signed duly by the doctors, government authorized government doctors, and the government authorities only issue the certificate. In such case, it is said to be authenticated evidence. Here, they might have taken the procedure equal to the COVID. It is not the matter. As per the law, he has to be compensated. That is the thing in analytics. You must know that is why they are introducing number of analytics. We will see in the last hour what are all the different methods of predicting such type of crimes and frauds. Okay, with this we will stop the class. We'll meet once again later on. So now if you are sleeping, have a nice sleep, wake up quickly and come and join. Okay, bye.
Thank you, sir.
Bye, sir.